Hi, people. Thank you for stopping by at Building Wealth with Rajeev. Here's my chat with Olivier, 2020 US investing champion. He clocked 941% returns. Impressive, isn't it? In the chat, Olivier talks about trading strategies and, more importantly, demonstrates them by using certain examples. If you like the content, please share. Please do share your views as well, and also follow the channel.
Yeah, so generally speaking, as far as the stocks that I like to trade, I like trading, liquid, high beta stocks. So I consider them to be the leading stocks, the quote unquote disruptive growth companies. Last year, those were names like Tesla, Cloudflare, Pinterest, Roku, Peloton. I was on all those stocks and many others too. But really is what I do is I use the 10 and the 20 period exponential moving average sort of as a guide to what the trend is. And then I look to utilize chart patterns in my interpretation of volume to find low risk areas to get involved in stocks. And then once I'm involved, I've got my stops in place. So I'm usually risking, pretty tight stops, maybe 1 to 3%. Sometimes just straight up momentum and put a stop in there. And then I'll hold the stock and ride it up the moving averages, up the 10 and 20-day moving average, until they either break the moving averages or I sort of feel like there's euphoria and there's a good opportunity to sell into strength. And then I just kind of wait for the next opportunity and do it again. So I think the key to my strategy is, one, I'm trading the leading stocks. I really do believe that I'm pretty good at finding those top names. And then two, I'm taking, fairly small risks in relation to the upside of a trade I'm making. So I can afford to, have a bunch of small losers and, I can catch one big winning trade and it'll more than pay for all the losers. And then three is I think I take more concentrated positions than most people do. If I have an opportunity from a risk managed perspective to get a 30 to 35% position on a name, I'm going to do that if I think it's worth it. I'm not buying like, 30 or 40 stocks and putting 2% in each name. I'm waiting for a stock to move. And if I like it, if the earnings are good, if the sales are good, if it's trading near its highs, if I like the story and I think that it's a disruptive company, and I can get into it with a 1 or 3% stop or something in that range, then I'm going to go for it.
What's your time horizon? I mean, are you a swing trader? What do you call yourself, Olivier?
I mean, I'd say like I'm a swing / intermediate term position trader. So, usually for my top core ideas, my top 6 to 8 names or so, I'm usually looking to hold them for multiple weeks, maybe like 6 to 12 weeks, just kind of depending on the market. But then you get to like the bottom half of my account, or if we get later in the cycle and I've kind of taken profits on some of my cores, I may make some swing trades, or possibly even a day trade, where I just feel like, hey, I've kind of made my money this move, but there's still opportunity. I don't know when this, intermediate term move is going to end, but I don't want to get caught holding a ton of stock at the end of the line. So maybe I decide, hey, I'm going to buy this breakout, but I'm going to sell it on like day 2 or 3, because it's just not like a core name for me. So I'm kind of a mixture of that, intermediate term trader / swing trader.
But one thing, Oliver, about you is that you don't use any fancy strategies. I mean, you're like, exponential EMAs and all that, price volume is very simple stuff, right? I mean, not in Elliott waves or anything.
No, I like to keep it simple. I could probably even trade without the moving averages if I had to. I would definitely need the price and the volume. Those are the two most important things for me. The moving averages just kind of smooth everything out for me, and they make it easier for me to interpret what's actually happening. And they they make it so you can't really argue with what the moving averages are telling you. Like they're either uptrending or downtrending. You can't see it incorrectly. So the moving averages are nice because they just smooth everything out. But yeah, I've messed around with things like RSI and stochastics, Elliott waves, Fibonacci's. Trust me, I've learned it all. I've read books on DeMarks. I've done it all. But at the end of the day, all that stuff is a derivative of price or volume. And you read Jesse Livermore, who's probably the guy whose work I look up to the most. You can see everything that's happening in the tape. You can see it all in the market. And that's truth. Like there's no lying when you're looking at literally the volume in a stock or where the closing price was. Like stock traded $100 million today and it closed right here. Like that's an important price, stochastics, RSI, Fibonacci, whatever. All that stuff is just a derivative of the price. So if I can, interpret price and volume, as well or better than anybody, I'm gonna do really, really well.
But let's talk about some of the learning lessons within your trading techniques. You look at the exponential averages and all that. What's there? Which one you recall?
Yeah, so I mean, I would just say when the market is below the moving averages, when we first break below the 10 and the 20-day moving average, and you may get a little break below and it comes back the next day, but when you start to live below the moving averages, just don't trade, just don't trade. It's really that simple. Or if you're gonna trade, you likely should trade smaller, or maybe even day trade and not hold overnight. I just find that when that market is below the moving averages, you're fighting the tide, and you can save yourself a lot of pain, grief, and stress and frustration trying to buy a market that's going lower. When in reality, if you just let it go lower, it'll usually, in my eyes, yell at you when it's ready to go back up. But that can take a couple weeks. So
you made some mistake on that lines. Did you screw up somewhere there?
Yeah, I mean, it's a constant battle. I think I'm fairly comfortable now with my strategy, and that I will more likely sit out when we get below the moving averages. But everybody wants to come and trade the market, and the question is, do you have the discipline to kind of sit out those bad markets? And I don't necessarily think somebody that can make a ton of money in a good market is who I'm so interested in learning from now. It's how do you protect, how do you keep the account moving, even if it's just a little bit, when the market's bad. Because for me, I don't have any problem making a ton of money when the market's good, and I've gotten a lot better when the market's not good to just sit out. But that's my weakness, and so the better I can get at just literally doing nothing and sitting there. And I think the more cycles you go through, the better you get at it. So for me, every time we go through a correction, I view it as like a huge challenge. Can I keep the account like literally on the highs, or maybe even make a little bit of progress as we're in the correction? That's kind of, that's for me, like my main goal for each year is to just kind of keep my account on its highs during corrections, because I know I'm going to make a ton of money when the market's good.
And I mean, that's awesome to know. But what's your biggest win in the sense which you're really proud of, which you think
My biggest win, I don't know. That's a tough question. I gotta say, I probably spend more time like thinking about my losers than my winners. My biggest, I mean, you know, my Livongo trade was a really great trade in the sense that I bought it and I pretty much held it. I sold it in the morning one day and I bought it back that same afternoon at the same price. But I pretty much held that trade from you know, what was it, like 25 bucks to 135. And the day that we talked, I sold it. I was pretty proud because I had made a lot of money in that stock. It was my biggest winner ever. And the day that it topped, I was on it and I got out of it. So I'm pretty proud of how I sold that stock more than anything else. More than, you know, to hold it like I did. And then, you know, to be able to kind of, how do I put it? To be able to just kind of separate myself from like the previous 3 months of success. And when the news of the merger with Teladoc hit and we were extended from the 10-day moving average, and I was actually thinking the day before at the close, like, you know, this thing probably needs some rest, pull back. And then when I saw the news in the morning, it was like I reacted. You know, I knew we were going to pull back, and that was the reason why. It was quote unquote good news. Market usually tops on good news. And, you know, I'm pretty proud of myself that I just kind of switched on a dime and sold that thing. So that was a good trade. And I did the same thing in Zoom. I sold Zoom at the exact all-time high for different reasons. But, you know, I don't always sell the best. And, you know, if I can sell well, you know, it's really, really gratifying.
What are the top three things advice will you give to fellow traders? What is important in trading?
I mean, just holistically, because there's, you know, there's a lot of different time frames and ways to trade. So, you know, one, I would just tell people find a strategy that fits your personality. Because, you know, if you're not quick and you don't like pressure, you know, you probably shouldn't be a day trader. You know, you should be more of a position trader. But, you know, if you don't have patience and you don't like to let stocks pull back, you know, you probably don't want to be a position trader because it's not going to fit your personality. So that would be number one, is find something that fits your personality. And then, you know, commit to a strategy. Don't jump around and try a bunch of different things. You know, try something and try to get better at it. And then two, I mean, just your winners have to be a multiple of your losers. So one, have small losses. Two, have winners that are, you know, a significant multiple of your losses. I would say, you know, at least 4 or 5 are, and you know, hopefully opportunities to have far greater multiple than that. And then, you know, three is just kind of listen to your account. You know, if you buy something and it works and you can kind of get your stop to cost, you know, then you can buy more. And then if that works, you can buy more. But, you know, if you buy 3 things and you get stopped on all 3 of them, you know, you probably want to kind of listen to what the market's telling you. And, you know, maybe your next time in, you know, maybe you only try to buy one thing, get that going. And then when you start to make some progress, you know, start getting aggressive. But just kind of listen to the market, listen to your P&L. Like your P&L is your number one indicator at the end of the day. You know, you're either making or losing money. And if you're losing money, what are you doing? And don't do that anymore. If you want to look at a couple kind of recent trades I made.
Yeah, that's going to be fun, Olivier. Thank you for this.
Yeah. So here, since I know that you like Tesla, which I like Tesla too, we can.
Well, I'm a big fan of Elon, though.
Yeah, I like Elon too. He's the man. But let's see. Let's look at Tesla. So kind of what am I looking at on Tesla right now? Tesla's been out of favor, right?
Yeah.
You know, this is the monthly chart of Tesla. And, you know, we had this big run from 180 to 900, right? And we've really been in a 5 to 6 month consolidation here. And everybody's jumped off the Tesla bandwagon. Nobody wants to own Tesla anymore, but I do. I think Tesla looks good. I think it's kind of basing in here, and you know, this trend line's on a lower time frame, but I think we're just kind of in a big base. I could see Tesla consolidating for quite a while, in the sense that, you know, we had such a massive move. This is healthy action. I think we're going to probably come up here, and maybe it'll take another couple months. And then at some point, I think we'll make a new high, which is natural. Like if you kind of look at Tesla, you know, we had a 1, 2, 3, 4, 5, 6, 7, you know, we had like a 9-month move. You know, we're kind of 5, 6 months into a sideways basing period. You know, if we can do another 3 months, it'll kind of be 9 and 9. And I think we'll have a chance to push higher. So kind of is what I'm looking at on this, on the weekly. So this is the weekly chart. And I noticed this week, really, I noticed about 6 weeks ago, this is what we call a doji candle.
Yeah.
And doji right in here on support. So this is where we bottomed out in March, and we put a doji in here. And it, to me, it just kind of said, you know, buyers are going to support the market at this level. It didn't really to me mean we were going to, you know, rip roar higher yet. But then we put in this little 4-week consolidation here. Nice tight price action. So I call these inside bars. So this bar is inside of this one, which is inside of this one. So we've kind of got 4 inside bars, which is a sign that volatility is contracting. And then if we go into the daily chart, so I like to combine, you know, multiple time frames when I'm, you know, looking to buy a stock. And you can kind of see how I work down from the monthly to the daily. And if we look at this daily chart, I like to draw trend lines. So I had a trend line drawn, you know, right in this range. And then also from up here, I had one drawn. So trend lines to me, you know, the way you draw them, you generally want to touch 3 tops. So in this one, I got 1, 2, 3. This one, I got 1, 2, 3. But it's not an exact science, you know, it's, you're really looking at the price action or the trend line. But this right here is that 4-week tightening action. So you can see we put in a low here, we traded up, we came back down, we put in a higher low, we trade back up, back down, we put in another higher low. And you can just kind of see how the price action is pretty wide and loose here, and how it tightens up. You see how it kind of tightens up more.
Yeah. And it's going up now.
Yeah, and then so I bought Tesla on this day, you know, right on the open. I bought Tesla, or a little after the open actually. And really my stop on this, because of where I got it, my stop's at cost, which is, I think it's like 636 or 7 or something. I think I bought some and added a little. And, you know, we went up and we could easily roll back over here. We really could. I mean, this has been a laggard stock, and we kind of went up today on huge volume. I mean, look at the volume, and we could easily roll back over. Now, that's not what I think is going to happen. I'm just pointing out that that could happen. And really kind of my thought process here is if we saw some backing and filling, you know, if we saw the market come back, is what I want to see is I want to see the 10-period moving average catch up. And there's a gap fill right here. I would love to see this market hold if we pulled back. I'm not saying we're gonna. I'm just saying we could. I would like to see it kind of hold this area and then re-engage higher. That's one scenario I'm looking at. The other scenario I'm looking at is that this looks like a big kind of reversal bar, right? And that we traded up and back down. But look at this. We were up 3.5% today. So we had a pretty good, right? We may have finished what? We finished, you know, what, we closed around 680. You know, we finished about 20 points off the highs, 3% off the highs, which isn't great. You know, you want to see your stocks finish on the highs. But one of the things that I use is called the wick play. And the wick play is the idea that you have a wick like this from the previous day. And if we open in this wick tomorrow and trade inside the wick, is what I think will happen. And again, I don't know what'll happen. But if we trade inside that wick, I think is what you'll get is it's a sign that this stock is really strong. And I think we'll get like a consolidation here. And I don't think the moving averages will catch all the way up to it. Then I think we would go higher. And that's really what I want to see here. That would be ideal to me. The reason being why that would be ideal is because I think that unfilled gaps are a sign of strength. And so if we were able to do that and we left this gap unfilled, this could be a breakaway gap, you know, showing that we could be getting set up for a real move. So that's what I would love to see, is that second scenario. Let's hope for that, because I think if we saw that, that would be pretty powerful. And if we saw that, the main thing I would be looking for next would be for us to take out this last month's high right here at 706. We take that last month's high out, I'll be feeling pretty good about Tesla. You know, maybe it'll still be a little choppy, but I'll be feeling pretty good about it. So that's scenario 2. Now, scenario 3, which I personally only really see this happening if the market rolled back over. Scenario 3 would be, this is a heavy volume reversal bar, and we take out this low, and they sell it hard. I'm personally of the opinion it's going to be one of scenario 1 or 2. I'm long the stock. I haven't sold any from when I bought it. I'm looking for this thing to make a move. But for me as a trader, you know, that's kind of how I think about it. I'm planning on scenario 3 like in my head, I'm like, scenario 3 could happen. And if that happens, what am I going to do? Well, my stop is at cost, so I'm risking all my open gains in reality. And that's just the nature of the beast. You know, I'm in a situation where, because I bought the stock correctly and it did well, I'm able to, you know, risk my profits here, but potentially catch a big move. And, you know, those are good positions to be in, you know, where we kind of talked about that risk reward relationship. My risk is controlled now, and my risk is controlled because I used proper technical analysis and I bought at the right time. And now my reward, I don't really know what my reward is going to be yet. I have to take it day by day and interpret the price action. I think one of the things that has helped me as a trader, so I post charts on Twitter. Tesla is one of the charts that I posted as a buy area. And a lot of people will say to me, well, like, you didn't sell any today. You didn't sell any today. Like, it had that huge reversal bar. And it did. And sure, I would have loved for it to close at the high of the day. Like, that's what I would have preferred. But I am of the mindset that I am not looking for a, you know, 8 to 10% move. You know, I'm looking for a bigger move for the most part when I'm buying stocks. And so I'm at this point waiting to see if the trade works. You know, like some people were really excited here, and I'm not saying I wasn't. You know, I was pumped Tesla was higher, but I'm still in the camp like, you know, is this trade going to work or not? And over the next couple of days, I think when we get some more information from the market, you know, that's you know, we'll see what happens. But I'll give you an example that's, you know, a little similar to Tesla today.
Yeah.
So Peloton is another stock that I've been looking to buy. So here's the monthly, big move. And we kind of, sorry for all these lines. It's tough for me to delete the ones on lower time frames. But you can see we pull back into the 10 and 20 month moving averages. So my strategy works on the monthly, the weekly, the daily. You know, if you're a long-term trader, this is what is this? This is a bull flag. This is a bull flag on the monthly chart. That's it. And so I see this monthly, and, you know, if you zoom into the weekly, that flag looks like what I'll call a wedge. So this is a bullish wedge, and there was a head and shoulders top here. You know, I know a lot of people were looking at this. I was pretty bearish I was bearish Peloton here and here, and I was real bearish here. Like, you know, I thought this was going to break, but when we didn't break, then I said, okay, the sellers couldn't control the stock when it went lower. And so I need to pay attention in case it wants to go higher. So a lot of people will say, oh, like, you know, you got off of Peloton, blah, blah, Head and Shoulders stock. It's like, hey man, I rode this thing all here and I got off and I reserved the right to, play it as it lies. And so same as Tesla had that kind of 4-week consolidation, Peloton had this kind of 4-week consolidation here, and we were able to break out of it this week. And let me show you something with Tesla. So Tesla had the big move, and then it had the update with the reversal bar, right? So if we go look at Tesla, big update, reversal bar day, and now we'll see what happens. But what did Peloton do? Peloton had a big update, and then I don't have it on this chart right here. Let me see if I can show it on another chart. The 200-day moving average, I don't have it on here, but the 200-day moving average on Peloton's like right here. And it kind of stalled the stock out a little. So this kind of looks like a reversal bar, right? And I took the same approach with Peloton as I'm taking with Tesla, and that I bought this breakout, and I was looking at this and I was like, oh man, this could roll over tomorrow. Like, who knows? But I don't know. I'm just going to set my stop down here and hope for the best. I don't know. And what did we do today? We opened in the wick, traded higher. And I still don't know what's going to happen tomorrow. But I view that as a bullish sign. My stop on this now is rising with the moving averages. And at some point we'll go up, and at some point we will pull back. And pullbacks are a very good thing. People don't like when their stocks pull back, but stocks pull back, they rest, and then they go higher again. So like I'll show you. So Cloudflare is a name. Here, I'll show you. We'll look at Cloudflare. So it's a perfect example of this. Cloudflare, I was really involved in this, but I kind of messed it up in here. But then I really got long this again in here. I got long in here. So I bought it at like $84 with like $1.75.
Oh, it's 109 now.
Yeah.
Holy shit.
Yeah. So I bought this in here with like $1.75 stop below the day's low, and it went up and it pulled back and it based. So like this is a pullback day, and that's a good thing, because then when we take out this level, I can move my stop up to here. So you need pullback days so you can kind of see where buyers stepped in and supported the price. So you can move your stop. We go up, we pull back, we create a little bull flag, we break out. This is another buy area. So I actually added more to this here. We break out, and what do? I raise my stop to here. And we go up, we pull back, I raise my stop to here. We go up. This isn't the best bar. It's not the best bar. Motley Fool came out and promoted the stock today, which we'll see what happens. If they sell this off on huge volume tomorrow, then that's a sell signal for me. But I'm sort of the opinion we're just going to chop around here a little bit. And if that does happen, and then we move higher, I'll move my stop up, and I'll ride the stock as long as it wants to go higher. And then, at some point, stocks break down. So let's go look at Zoom, last year. So Zoom, I traded Zoom, really was one of my main stocks from in here. I was trading it all up here, got stopped out here, and I rebought it. And then, but my final trade in Zoom, I actually bought I bought some on this day, right off the 10-day. And then right on this day, when we kind of broke out of this bull flag, I bought some more. And we went up and we held the 10-day and pushed higher. I raised my stop, and kind of same thing here. We go up. Sorry, my computer's slow. We go up and we consolidate, and you see how we hold the 10-day moving average the whole time? Then when we break higher here out of this little base, I raised my stop up to here. And I was a little bit fortunate in Zoom in that when we topped out in Zoom, if you go look at the monthly chart, we had a lot of air between the 10-week moving average and the price action. And usually you'll get 2 extensions from the 10-day. We had one extension right here, and we based that out. And then this was the second extension. Does that make sense to you, where we kind of extend from the 10? Yeah. So on all time frames, whether that's the 5 minute, the 15 minute, the daily, usually that second extension is, you know, not always, but usually it's harder for the stock to go higher than. And then when I was looking at the monthly, you know, the monthly is getting pretty extended, and this didn't help me sell it, but I was looking at the daily on this, and I knew we were in our second extension on the weekly. And then I had this rising wedge drawn. And when we had this shooting star right here, I got out of this when we lost this day's low. Now that was an early sell signal, but the real sell signal for me, if I hadn't got out there, would have been right here, this day. Come down and we kind of base here, and then we lose the moving averages. I would have got out of the stock. So, you know, the nice thing is that I happen to do a good job here, but you know, sometimes you don't do a good job, and you know, that's just the nature of the game, right? But kind of the safety mechanism in my system is the moving averages. Once we lose these moving averages, I'm out. And you'll notice that we lost that moving average, and then lose it, we come up, we fail at the moving averages again, we come up, we do kind of pierce through them here a little bit, but there's no base. You know, this is sloppy price action. And you know how I told you I like big gap ups? Big gap downs are also a big red flag. So if you look right here, we had a big gap down right here, right?
Yeah.
Unable to fill this gap, right? The gap would have been filled up here. We traded up here, and then what happened again? We gapped down again. So usually you get one gap down, there's usually more in store. And on this one right here, we missed earnings. And look, we trade below the moving averages all through here. You should have been out of this market all through here. And then, so what is that? That's from, you know, October to January. There was no reason to trade Zoom. I will say that I did try to start to get long Zoom in here. I thought Zoom was going to roar
January,
back.
that was January, wasn't it?
Yeah, so I tried getting long Zoom in here, and I think I tried it here at first, and I got stopped out, and I tried it here, and I think I got stopped out, and then I tried it here, and it worked, but it just kind of didn't work. And then what happened? We rolled over, we lost the moving averages again, and this was a cash trade again. And then in reality, I mean, we're below the moving averages this whole day. This is earnings, and they sold it off. And we traded below the moving averages the whole way. And there was no reason to consider this stock, at least for my strategy. Now, we come down here and we base out and we recapture the moving averages, we consolidate. And then when we break this trend line here, to me, this has been the real legitimate first time you would consider getting long Zoom. In the top. Now I'm not in this trade. I just sort of think Zoom's best days are behind it personally. But I see the validity of the setup, and it worked. You know, if you kind of bought in here, this 330, 340 area, you know, you've made like 10%. It just kind of seems stallish to me though. You know, it just doesn't quite have that power that I like to see. What are some other stocks that you've been trading? That you
look, I think one is CrowdStrike.
Crowd, yeah, I love Crowd. Crowd's been one of my top names all last year. I traded Crowd, and then this year I bought Crowd really well down in this 190s area, and here I'll try to show you why. So a lot of the other growth stocks from last year, like Roku, Peloton, Zoom, that we kind of went through, you know, CrowdStrike corrected just like they did, right? It corrected, but it did something unique in here in mid-May. well, really in March, it didn't make a lower low. So see how on the weekly here, 3-1, and then 322 and 329, we hold this low, whereas a lot of other stocks made it lower low. So that's just a subtle signal that CrowdStrike is a little bit stronger than some other names. And we trade back up, and it's just not quite ready yet. You know, it needs to consolidate more. But then when we pull back down, a lot of other names retested this low again. And what did CrowdStrike do? CrowdStrike made a higher low. So like when I showed you the Tesla chart with the doji before, that doji was down here,
Yeah.
which, you know, to most people, they may not see the significance of that, but to me, that's huge. In that CrowdStrike is putting in a higher low. It's showing that it's stronger than Tesla. And we're also holding this weekly trend line, which is great just because it's a support level. And when I kind of looked at this chart, I kind of see, you know, almost like an inverted head and shoulders.
Yeah.
And I love the stock fundamentally, big earnings, big sales. I think cloud security is only going to grow.
Very relevant.
Yeah, so fundamentally, I was already interested in the stock. And then the way that I trade, so I did buy this in here and I rode the moving averages up and I got stopped out here and I was out of it. But then this is what I call a wedge pop, where price kind of sets up under the moving averages. We've got like 7 or 8 days of tight price action here. So this bar right here is what I call a bullish counterattack bar, and then we gap down and we trade it up. Then this bar is inside, then this bar puts in a higher low. So the same way I show you the higher low on the weekly, I'm looking at that on the daily, and then another inside bar almost. And then we have a little pivot right here at like 192, right under the moving averages. And really, I was buying the break back through the moving average. I think I got it at 194. And unfortunately, we gapped down the next day, but I was able to hold it. And then when we took this 200 level out, I raised my stop. I raised my stop right here. On this day, I raised my stop up here. I was 4 or 5 points in the money, even if it rolled over on me. And we went up and we did resist here. I ended up exiting this here because earnings were coming up. I do hold through earnings, but in this scenario, I hadn't, you know, my account hadn't been moving powerfully. Like this was one of my biggest positions and we were up like 10%. So I hadn't been making a ton of huge progress, and I decided to go to cash, and we sold off on earnings. And then I actually bought a little bit of this in here. I just kind of saw it, and we were holding this 50-day moving average. So I bought a little. We had these two little flaggish type days. You can see the low of this day is right into the 20-period moving average. And when we took out this day's high, I got pretty long CrowdStrike again, and and I've just been riding it higher. So I got long, and at that point, you know, I think I got it at 210 and then 217. So I can't remember what my exact average was. But my stop was like right here. So, you know, since I got some here, my stop's almost at cost from the get-go. And we go up, we pull back, we base, we put in a little base here. We reconfirm. So I call this reconfirming price strength confirmation. When you go up and pull back and then reconfirm higher. I move my stop up to right here. We go up, we pull back, we bounce right on the 10-day moving average. I move my stop up to right here. And we have a nice little gap here, which this may get filled. I'm not sure yet. But another scenario is it doesn't get filled. And this is a big weekly breakout. And this thing's about to really get going. I don't know. It feels a little tired to me here, like it does need a little pullback.
Yes.
But my stop's down here. My stop's down here. And I'm in wait and see mode here. You know, I don't know what's going to happen. My hunch is we're going to kind of consolidate and then head higher, and I'm going to raise my stops and I'm going to ride it higher. So this to me is what I call the wedge pop through the EMAs. This is what I call the EMA crossback. These to me are more just pullbacks. I think at some point here we'll get a longer multi-week base, which is what I call the basin break. And then I think when we break out of that, it'll be an opportunity to add to this thing. And, then eventually we'll have, like a blow off, like some of those other examples I showed you. But I still think that there's room to go here with this thing. I just think it needs some time to consolidate. And, some people, don't have the patience or the experience to sit through that stuff. But, I've just kind of learned over the years that I'm good at picking the direction. And, I think I probably make more money when I don't try to catch every wiggle. I just, I think we're going to go up. I don't know exactly how we're going to get there, but I'm along for the ride, and I've got my, safety stops in place, in case I'm wrong.
Well, I mean, you have a good life, Olivier. I mean, this is fascinating stuff.
Yeah, I mean, I love it. I could do this all day long.
Yeah,
my wife's there's like, what's he talking about down there? But she knows that I could talk about this for 5 hours.
It looks like that. Now, can we just summarize this? So, in terms of Tesla, CrowdStrike, and Cloudflare, I think if you rank them, what I understood from this, CrowdStrike has the strongest price action. Is that true? Is that?
I think Cloudflare has the best action. If you look at the weekly so the same way we used the higher low example, Cloudflare put in a higher low here and here. And if you just look, like, we're clearly at a new weekly high, like no doubt about it. Whereas CrowdStrike is like just trying to poke out.
Okay.
Tesla right now, as much as I love it, Tesla's a laggard right now.
Okay.
It's not leading the market. That's not to say that can't change. The thing that I do love about trading Tesla, which I think is kind of unique to Tesla, is Tesla really trades at its own beat. The market can be strong and Tesla can be weak. The market can be weak and
Tesla defines its own territories. I mean, that's it basically reflects Elon's personality, isn't it?
A little bit, yeah. I think that's a fair statement.
Yeah. And Zoom, you're not very sure neither about the fundamentals nor about the direction.
I mean, I like Zoom's product. I think in that video space, I think they've got the best product. I don't think they have a lot of competition, though. I think all the other products are not very good. But, I may not be a straight up fundamental guy, but I do look at market cap, and I just try to think about, what the potential upside could be relative to, what the company does. I could easily see Zoom, doubling from here, but that could happen over multiple years.
Yeah.
I don't know. Yeah, I don't know that the high flying days for Zoom are still in store. I could be wrong though. I could definitely be wrong.
My goodness, this is really fascinating, Olivier. I'm so thankful to you. My last question to you. You cracked the championship, 900 something. Now, what's life ahead for you? How much are you targeting every year? I mean, it's not in your hands, but what's your expectation from yourself?
Yeah, so I mean, kind of my first goal every year is to just, triple digits, 100%. And then, my sort of stretch goal, which I'd never hit until last year, my stretch goal is 400%. And that's kind of up until last year, that was kind of my goal every year, like 100. And then, if it's a really good year, maybe I do 400. But last year, to me, I'm fully understanding that it was a very unique year. It was a great year to make money in the market. But it also just kind of showed me that, because last year I made a lot of mistakes. Like I really could have traded a lot better. And the funny thing about trading is, not everybody really, really knows what you did except you. And I wouldn't have given myself an A for last year. So I think there's a lot of room for improvement, and that kind of gets me excited in the sense that, I'm hoping that I can crack that 1,000% mark, one year. I was actually above it a little bit into the end of the year, and I thought my competition was charging, and I kept trading. But so that's kind of that's probably my new stretch goal. You know, I'm not saying it'll happen this year, next year, any year, but that's something I'm definitely shooting for. And, you know, I think it's a possibility if I just keep getting better. And so that's something I would really like to conquer. But really, I just want to, you know, grow my business. You know, I've got a wife and a kid, and if I can grow my business and support everybody and, you know, be happy, that's actually really what my goal is.
No, no, I wish you all the best. And I think, look, my hunch is that you're going to crack it. My hunch is going to surpass 1,000% because the way you love your business, the way you love your job and you're honest about it, I think you're going to get there. And
Yeah, I hope so. I hope so.
no, I think you're doing the right thing, Olivier. And, you know, I'm really grateful that you gave me time, you know, and my love to your family, my love to your newborn child, and God bless him or her. And we'll chat again soon.
Likewise, God bless, and thank you for the time. And anytime, I'd love to come back on.
Take care, buddy.
All right, see you, Rajeev.